Hello again. Today was really an unusual day because of the extreme low volatility, and normally it would start out in a typical day, it would start out with higher volatility and decrease towards afternoon New York time or Chicago time as traders go to lunch. Usually you get your lowest volatility around 9 o'clock Pacific time or 12 o'clock Eastern time. And today was kind of the exact opposite. It was the reverse, which was really unusual. And I thought I would just show how to trade the low volatility, because a lot of times market isn't the perfect level of volatility for trading, and you just kind of got to adapt to it. And basically that just means adjusting your targets to fit the market. So how I would do that, I'll just go into this again. I've got the on the bracket orders, which are the automatically placed orders by this particular software. I've got this sell limit set to a target of 2, and the buy limit set to a target of 2, and which is a limit order. And I've got the stop losses set to 5, and I know that sounds like it's a bad profit to loss ratio, but actually the odds are higher of hitting that 2-point target first before it hits the 5-point. So I figure it's fairly good odds of fairly high odds trade, even though it looks like it would be lopsided. It's just it keeps that 5-point target in low volatility, keeps it out of trouble. So I know that's debatable. On some people would prefer to trade, if they're going to trade 2-point targets, then maybe you'd want a 2-point stop loss. But I find it's better just to give it room to breathe a little bit, even though that if I have to take a loss, I'm taking a $100 loss per $40 gain, subtracting commissions. So that's how I've got it set up. And let me start the trading here, starting the market up. Hit the play button. This is just prior to what it looked like prior to the 6:30 opening here in California. And it'll be difficult to know where to speed it up, because I think the frequency of the trading was fairly quick. So if I try to speed it up to save time, with this market replay program, I'll probably miss some trades. So I'm just gonna kind of take it the speed that it would normally occur in real time. I have it set to 1.5 speed because I find that 1.0 is a little bit too slow. And normally this will be the first minute, the opening minute, 6:30. And normally I'm not going to. That's kind of a gamble if you're day trading, if you're basing it on previous formations. So I like to let the first minute go by and let it establish the first fractals before trading in the market after the U.S. market opens. So we can. It first took a dive here, and but it would be very difficult to know. It'd be kind of a guesswork to try to make any money off that one. Remember, I'm going for 2 points targets, and each one of these rows is a point. So that would be our first move up here. And the goal in this case, since it looks like it's trying to establish an uptrend, would be to enter the trade as it hits that blue line, the blue 80 MA line, and then establishes a number 3 point, then I can enter the trade to the long side. And it's the same technique that I would use for a volatile market or any other market. So let's see if it gives me a chance to get in here. Now, I know some people would be tempted to enter the trade. They say, well, that looks like it's momentum heading up, but you just got to wait for that fractal to form first, because as you try to enter close to that Bollinger Band, more often than not, you're going to get a reversal, and you have to wait through that reversal. So I don't like to do that. I like to wait for that number 3 point to form right down near the as close as possible to where I would project the 80 MA line to be. As you can see, it's even with the current bar, so you'd have to kind of project where it's going to be in the next bar. So at that point, I would say up around there would be probably the entry into the next bar if it makes a number 3 point here. And so I'm trying to enter as it counts down to, there we go. Oop, I'll make that 2 point target. And you can see there's a little bit of a delay in the some days you get a little bit of a glitch in the way the market replay records the software. I don't know why that is, but for our purposes here, it'll work out pretty well. So that would be the first $40. In actuality, they're going to take the broker's commissions out. So let's say $37. It's about $2.58 or something like that. But I'll just round it up to $3 for broker's commissions per each trade, per each contract. So that would be $37 normally. They take it right out as you make the trade. So again, I'm doing the same thing now. I'm watching for the next number 3 point form, and it's just the safest way I found to trade. You know, you could be really you can make trading into a gamble if you wanted to, and trade right at that upper Bollinger Band, and you'd probably be successful. But there are times when that's the exact area that it's going to reverse on you. So just better to have a method and be safe and trade as close as you can get to that after the pullback has been made into the number 3 point. So yeah, that looks tempting right there, but it's already passed me, so I guess I was asleep on that one. Yeah, I probably should have entered right there as it crossed back over, but again, that's those same bar entries are difficult. So I'm just going to wait for another opportunity here. I don't know if that's trying to reverse or not. So I've got to use that as a number 3 point right there. And if it opens up higher and starts trading through that, then I want to be long. So I'll just let it progress here. It's good to be really patient on these, because you don't know if it's going to bend the 80 MA line down like that and blow right through the 14 SMA line. That's usually a good sign of reversal. But so okay, so it's coming back up, it looks like, and so couldn't enter right there because I'm still not sure yet. I think it's going to continue long, so what we're seeing here, this is a retracement bar on the 5-minute chart, but it looks like it's going to bounce off that 80 MA in the 5-minute chart and be long again here. So looking at the countdown timer, I think I want to be in that trade on the open of the next bar if it's so close to that, close to the line here. That's way up there. I can't enter there. Well, see, I entered there, but I shouldn't have done that. Even I get a little bit impulsive. What I'm seeing is this pattern. I missed it down here. That would have been ideal. And I made the mistake. You know, I could pay the price for that, entering close to that Bollinger Band. But there was a lot of slippage. I tried to enter at that open, or as it was coming back and then pulling back through it, but yeah, I might not get a good trade here. Might have to wait for the next one. That's a bad habit that I just did right there. I moved my stop loss away from the action, and so yeah, I have some bad habits too. What I should be doing is moving it closer below the support as it tries to move up to decrease my risk. You can see if I would have entered the trade right here where I say I want to enter it as it's crossing the line, I would have already hit the target, and I would have had to wait through all this area here, which is the biggest, the hardest part of trading. If you get that timing off, you just got to wait through adverse movement and hope your stop loss doesn't get hit. I'm going to take a gamble here. Let's move it down here below the previous pivot point, and if it starts moving up again, I'll just go ahead and move it below the number 3 point here, or the next number 3 point. The risk I'm taking is this could be a reversal. That was a horrible fill, but you know, I'm going to show the ugly stuff too, so you have a good idea of why timing is so important. Oh my God, that looks like a reverse. It might not give me another chance. And this is why moving the stop loss away is so bad, because I just increased my risk there, and I'm already, if you look at the profit and loss, I'm already into the loss area as it comes close to my stop loss. So that was a bad time to move. Making a lot of bad decisions right off the bat here. I didn't do this in the real trading, the live trading, which is ironic. I guess I'm just more relaxed. Okay. Finally. So that was everything about what not to do. So yeah, do as I say, not as I do. So what I'm seeing here is that on the 5-minute chart, if you look on your left side here, it's breaking through that upper Bollinger Band there, and I'm seeing the lows of these bars are close to that upper Bollinger Band and at a distance from that 80 EMA line. And when you see that, if I were to see well, right there, it's coming down towards it, but as I see them get closer to that upper Bollinger Band, a breakout below one of these lows becomes more significant as a sign of a trend reversal. Remember, it has to, when you have a whole series of these close to the upper Bollinger Band. The closer they get and they start hugging that upper Bollinger Band, you get a breakout below one of these lows, and it comes right back down to the 80 EMA. It's a good chance that you're looking at the first leg of, you know, from the number 1 to the 2 point of a 1, 2, 3 top formation. There we go. It's a breakout there, but that, I don't know if that would qualify. We'll see. I know trading in this low volatility isn't exciting like it is when you're trading with 5-point targets. You make $100 every time, but here you're kind of just nickel and diming it, and already we were at risk making bad decisions. I was already at risk for okay, I'm just looking at the, I'm going to take a chance right there that looks like a, see how large that pullback is compared to the last move up. It's over 50%, and you broke past a low here. Oftentimes you can catch the first leg down of the 1, 2, 3 top formation. Again, that was a bad fill because I should have got right in at that line there, but let's see if I can hit it. I seem to do worse with low volatility. I mean, I should be more accurate on these entries here. What's most likely to do now is come back up against me and do that number 3 leg. So if I had gotten in right there, as you can see, as it crossed that blue 80 EMA line, it would have been it would have hit my target, but that was a bad fill. In reality, I'm going to get better fills than that. There's something just delaying this particular software pretty good. Come on, come on. Look where I've got my stop loss. I'm risking it all. Bad. I shouldn't do that. Bad habit. Bad habit. And I'm trying to trade counter trend on the 5-minute chart here as it moves down to the 80 EMA line there. So yeah, that was kind of fudging it there to get to $120, and I took too much risk for only a 2-point profit. So let's see if I can get it more accurate as I go along here. I'm just making it ugly. So you see the ugly side of trading here if you're not too accurate. The irony is that when you're trading low volatility like this, you want to be more accurate. But so far I've been less accurate than I am with higher volatility markets. Okay, what's it doing here? Looks like the uptrend is still intact on the 5-minute chart, which probably, if I was really playing it safe, I probably shouldn't even take the short trades, the trades against this trend here, because as you see, if you look at the 5-minute chart, you see what I see is a hook here. You know, I see the 1, 2, 3 of a hook. So that tells me if that's a low point and I get a higher low here and I break past that close here, then I want to be long on the 5-minute chart. So you always want to trade, you always want to give deference to the 5-minute chart over the minor swings happening on the 1-minute chart. So that tells me that's looking long, so I might not want to be too interested on the short side here, especially when it's flat. You know, and it's trying to curve inward. Normally, if this was really solidly down, and this was down, and this, I looked at the 5-minute chart and I see it penetrating through that ADMA line there, I would see the beginning of a downtrend here, and okay, I could trade short then, but what I'm seeing here is just it's flatlining, and so I'm not going to take hook type trades because I assume this is a trading range, and so I assume we have already had our move down here. Next thing to do would be, move back up to the top of that range towards the point of this hook here on the 5-minute chart. So that's how my projection's thinking. That, yeah, see, it's wanting to move up. Usually you see it first here if you're looking at the 5-minute chart and you're kind of analyzing how I would trade that. So I'm starting to see it pull back through to the other side, and if I can get a real positive breakthrough here, I think I would want to be long. So just be patient, let the market tell me what it wants to do here. Yeah, I'm not jumping on that yet because that hasn't made a full commitment to cross over the ADMA line. It's still parallel and kind of flat with this 14 SMA line. If that starts to come over and it makes a definite crossover, then I could probably commit to a long trade. Even though I'm trading, see right there, I don't like that because now it's turning away from that again. Yeah, and you see what it did over here. A 1, 2, 3. So I'm still seeing a long position here, but I want to wait for that crossover to occur. Sure, taking its time. I don't see it moving down to make a lower number 3 point. It's trying to move up and take out the number 2 point here. Okay. Yep, got that. So let's see if it maintains that uptrend here. I really can't call it an uptrend. I'm calling it I want to see really a 1, 2, 3 formation in a trading range, and I know that. See, it is starting to curve up. So yeah, that could be a emerging uptrend here. When you see it start to slope up, and this one's moving down initially, but all that means is it's increasing volatility when the Bollinger Bands are moving down or spreading apart. Eventually, if this trend is strong, this Bollinger Band will come around and they'll form a channel upward. And obviously this is the resistance right up here where this high is. So if it breaks through that high, that's a good sign, you know, that you're in a good solid uptrend here. But again, what I'm looking for here would be a number 3 point, same as always, and as close to that line as possible as I can get, or project it to be. Right now it's pretty low. Let's just go with that. So that is a gamble, because it's going to come back. Probably going to come back against me. Yep. It's probably going to come back to that line. I should have waited to the line. It's funny, and I would normally take that gamble with higher volatility. You know, if it's got a distance of about two points to the 80 MA line, I would say that, well, that's an acceptable gamble to try to get long. And but since we're only dealing with, you know, 2 point targets and it's such low volatility, I still want to be more accurate. I want to get closer to that line, which I haven't done here. So let's assume that that's the number 3 point. I just got in a little bit early, you know. I think the reasoning was correct there, but I just got in at this bar when I should have been waiting for this one. So we have breakout above resistance on that bar, so that's a good sign that's moving up. Where we've got the gator mouth opening, we've got the trend, the Bollinger Bands starting to slope upward. So I would think that's all the signs of emerging uptrend here. Sure taking his time. It got right to that. There it goes. Okay, so this would normally be 5 point trading. You know, we're at only $200. That would normally be 2 trades on a 5 point trade. So, but we're still before 7 o'clock in the morning. If you look down here at the time. Of course, right now it's 4:20, but I'm just playing the replay of what it would be at 6:55 in the morning, so that's pretty good to before most people even awoke or got ready for work. You know, I'm already $200 ahead, so even 2 point trading, you know, it's still pretty lucrative if you do it right. Which so far I've been making a lot of mistakes here. Okay, we're just doing the same old thing. I'm still looking for since we're in an established trend, I'm looking for those hook formations. This time I'm going to be a little bit more patient than that. want to wait for it to at least try to touch that hook. But you can see how clearly these hook. That's a pretty good solid formation right to the trade model. It looks like a definite hook, definite number 3 point, even though it's not really touching that line. I kind of have, on those first initial breakouts after the crossover, I have a little bit more certainty that it's going to continue the trend. You know, as the trend gets old here, I'm a little bit less willing to take it so far away from that line here. I want to see it come back a little bit more though before. Last time this is where I would enter it, but yeah, that looks like a number 3 point. Did I miss this trade? I don't know. At the same time, I'm going to try to be closer to my rules, because that looks like it's right in the middle of the channel here. You know, of the Bollinger Band channel between the top Bollinger Band and the ADME line. EMA line. So yeah, let's let that come back a little bit before I just jump at things. I'm telling everybody to have patience, and then I don't have patience to. Okay. See, the worst that I could do is mistake this for a 1, 2, 3 top, right? And then it's going to reverse, and then I would take a little bit of a loss, but hopefully reverse my position before it even hits that stop order. And I would do that just by hitting that reverse and cancel if I saw it coming back against me, and then I'll make up for the loss hopefully, and with the next swing down, because at that point I'm trading a legitimate trend reversal. If I'm wrong on the hook going up here. And I'm looking at the 5-minute chart, and I'm looking at this breakout here, and I'm seeing it made an attempt here, and it's, yeah, see, sometimes it makes a second attempt at a breakout. So that's my reasoning for that. So I have every reason to believe that this trend is pretty solid, because you know, we had the breakout of the support point here, which is defined by that high here, and we've got a solid trend all the way up. We've got expanding Bollinger Band lines, and now they're paralleling the ADMA bar. You know, this is not narrowing at all. The ADMA is not coming in towards the 14 SMA, so, and we've got solid hook formation, so all those signs are signs of a strong trend. So if you look at if you look at certain ways of analyzing the markets, it's always been said a trend is usually about three hooks long. I'm trying to think of the study that shows that. The name escapes me right now. I've talked about it before, but that's the traditional thinking, is that it's going to be like three swings long, and trends can be much longer than that. It doesn't have to be 3 swings, but generally, you know, if it makes 3, you know, it's a pretty mature trend that's ripe for trend reversal. But that's just kind of a rule of thumb. It doesn't necessarily mean that it has to be an absolute fact. And also, when the hooks start coming close together, you might be looking at a tendency for it to want to change trends on you. Okay, I'll go with that one in here. you think, you know, with the target so close like that, it's real tempting to just kind of get a little bit sloppy here. You think, oh, well, it's just going to hit it quickly, but with low volatility, you know, you got to treat that as a seriously as you would a 5-point target. See how these number 3 points are flat? I should wait for the next bar to form a higher low than this one right here. And so this bar might be the number 3 point. I was mistaking this one for it. Okay, or wow, almost hit my. I resisted the temptation to move it, but almost hit my my stop loss there. That was too close for comfort. So what it is doing here looks to me like it might come up and form a number 3 point of a 1, 2, 3 top, 1, 2, 3 high, which is okay. Let's see if I can get any profit at all. I'm going to hit that exit button. If it just gives me a little bit of space here. I didn't have to. Yeah, that was a little bit too. That's again, my timing was off. I should have entered as it comes back up through that line. You know, I should have waited for a proper number 3 point to form. But yeah, today I guess I'm showing what not to do. So if this holds right here, this looks like a 1, 2, 3 top. You know, 1, 2, 3. So let's see if this stays lower than this number 1 point. That's what I'm looking for in that kind of reversal formation. That would tell me it wants to now trade towards this number 2 point. So that's either number 3 point in an uptrend or number 2 point in a 1, 2, 3 reversal. That's the way I number those. Decreasing volatility, you've got the Bollinger Bands narrowing, you've got this ADMA line narrowing. I would not feel comfortable going long here, obviously. I should have gone long here. I think I went long here and almost got my 5 point target hit. 5 point stop loss hit, I mean. Okay. This makes me really suspect it's trying to change trends. It's narrowing. It's narrowing. The 80 EMA is narrowing. The Bollinger Band lines are coming together, indicating lower volatility. This trend is still looking like it's strong, but look where I would have to enter if I was entering the 5-minute chart. If I was entering at the close here, it would be at the upper Bollinger Band, so I couldn't take that trade there. So on the 5-minute chart, I would need to see it drop back to the ADMA line. So if it does that, that's a trend change here. Okay, so alright, I'm on the sell button because I'm suspecting a trend change, but you got to really be patient with these. They will try to fool you. That looks too perfect. for me not to take that. Okay. It's right there at the crossover, so how can that not be a sell? If it's not a sell, it'll be okay. Yeah, it's gonna hit that, I think. All right. Yeah, if that wasn't a sell, that would have been the most I've been fooled in a long time. So I would bank everything on that being a sell. And so once again, you know, it's probably we're over 30 minutes of video, so I know people are not going to concentrate more than that. So, and I really haven't sped it up at all, so I know I'm going a little bit long here. So this might be a good place to end this section here. It was just to give a feel how I would trade low volatility, and I think that accomplishes that. So I'll just end it here.